Hello and welcome back to the channel. This one we're going to be talking about stop losses, and we're going to have loads of live examples or live-ish examples on how to set them on lots of different setups. So without further ado, let's jump into the video. Okay, so first up we're going to start with just a basic trend line, and these are kind of examples that I use. There's lots of different ways you can set stop losses, of course, but these are obviously in this video is going to be the ones that I actually use to effect, and obviously the ones that kind of work. Obviously we've got lots of lines on the screen here. We've got these trend lines which I've pre-drawn obviously for the purposes of this video, and then we've got three kind of wavy lines going through the screen, which are just three moving averages. So the green one down here is the 200 moving average, and then we've got the blue one here which is the 50 moving average, and of course the yellow one which is the 20 moving average as well. I do change the colors all the time, so if you go back on older videos, they might be slightly different, but I normally have all three up on the screen regardless of what color they are. Yeah, we'll jump into the first example. Then I've got a few on this chart. This chart is literally just the SPY chart on the 5-minute time frame. Obviously these do transfer into different time frames as well, so every single one of these candles is 5 minutes, of course. But of course, if you're in the 15-minute, the 30-minute, it doesn't really matter. These kind of trend lines that do play out generally over the different time frames. So first up here, obviously we've got lots of contact points being the 5-minute time frame. Obviously the price action is a lot more volatile at this level. So and these kind of gaps that you see here, I've got the gaps indicator just on for now, just so it kind of represents kind of the different days. So this price action obviously gapped up. This is this will be Friday, October 3rd, and this was the price action throughout the day. And of course the next day would be over here as well. So that's kind of what's going on the screen there, just so you know. But yeah, we've got lots of different contacts on the screen here, as you can see, and obviously flowing up nicely. Then eventually we do get a break. We basically break the trend line, we come back up and retest it, and we push down. Now you're probably thinking, okay, what's the target price? But first, this is a video about stop losses. So first of all, I want to put a stop loss on. So let's go ahead and go for a short position at entry of the retest. So we want to wait for it to come down, come back up and retest the trend line. And that's our entry point. So the stop loss will just be just above the most significant high that's recent. So let's zoom in. We can see the most recent high is just this point here. So this on this day, it was 6:30, and it would have gotten the trade here at 6:40. And the stop loss would have just been, you can have it really nice and tight, but I like to give it a little bit of room just in case it spikes up, a little bit of news or just a little bit of volatility, because of course we can have the candle come up as long as it closes back down below the trend line. But subsequently with this particular trade, obviously it did kind of come down. Now there's two different points of target that you could go for. You could go for the gap fill, which of course I've got on the screen here. Opening price here on this particular day was down here. And of course, you can have the gap fill, the target price coming down to here, or you can actually come down to the 200 moving average. I probably won't go down here because that's not really in my playbook. But the 200 moving average 4 to 5 minute chart could also be a good point of target. But I think to start off with, especially if you're new, then the gap fill here is obviously definitely one to look for sure. So that's one trade we're kind of having a look at. Let's move on over to the next trade. It's a similar setup, but you can see here it's kind of played over multiple days. Rather than just one day's price action, we've got multiple days here. So obviously we'll get rid of that for now. That's the previous example. Trend line, once again, kind of coming up here, lots of touches. This is a very dramatic touch. So sometimes you can bring these up to the most touches, just because the price action at this point was so volatile that sometimes these candles tell a slightly different story. So you might want to just kind of bring it up a little bit to get some extra touches here. But it doesn't really matter too much. I mean, you can have a little bit of play on your charts and most of trend lines. If you do want to check out trend lines, I've got a trend line 101 video which I'll stick in the top left hand corner for you to have a look, and obviously I'll leave it in the description down below. With this trade, obviously a similar sort of setup, lots of different touches in the way up to the trend line, and eventually we do get a break. We do kind of get a break, but be careful, this is actually 5 minutes into the end of the day. You can see here the gap up the next day, gapped up nicely. So we don't want to take that unless we're trading futures, of course, that's a different story. But if we're trading kind of just within market hours, we don't want to look, we don't want to trade this because, you know, you're holding overnight and anything can happen. You can see essentially on this particular night, it actually popped up overnight. We don't like that. So we've waited for the next day, and obviously subsequently the price action has come down. We've broken the trend line, we've come back up and retested it. Notice that this candle here is closed below the trend line. So that's what we like to see. And obviously you probably would enter around about here just because of the extra kind of push down. But there's no reason why you can't enter here. So let's go ahead and draw the position. Say you entered on this candle, that's confirmed the break. And then your stop loss would be, as I mentioned before, just above the most recent high. Again, we'll zoom in just for context. Just above the most recent high. Again, you can leave it a little bit higher if you want, because there's a little bit of resistance here, so it's a little bit safer. But then obviously that's due to your risk appetite. But that's kind of the thesis I'm looking for. Now you're probably thinking, okay, what's the target in this particular range? Well, what you could do in this particular one, you could go to the 200 moving average, which is completely fine. Obviously, there's no gap fill like we mentioned last time. Or you could add yourself a Fibonacci retracement, which is just a simple indicator. Fibonacci retracement is set up differently, I think, from default, but I've set it up just a very simple, draw it from the lows of the beginning of the trend line to the highs of the trend line. And then you basically have a 50% line. When you draw the default one, there's loads of different lines, but I just had the 50% one. So that's another way of a target price. You can just go straight for the 50% retracement line. And obviously that would have hit, it would have gone down a lot more. So a good tip while we're here, while we're on this chart and having a look at that, you can have this target in mind, of course. Maybe take 3/4 off the table, lock in those profits, lock in those really hard-earned gains that you've just got through on the chart there, and just let the rest run with a nice tight stop loss coming down. And obviously this is the stop loss video, so this is what we're going to talk about now. So you've got into the trade, it's come down a bit, and you're probably not going to keep your stop loss there. So you want to kind of bring it down to break even, pretty much straight away if you get this particular move. And then, of course, as it does mature, these candles play out over time. You just bring the stop loss down. So let's go ahead and do that. This is my imaginary stop loss line. We just got to trail it down. I typically do it behind the 20 moving average, but you can just bring it down. Got the whole screen there. You can just put it just kind of above there, the resistance that we can see here. You can probably bring it here first because we've got resistance candles here. Or if you feel a little bit more comfortable, take a bit more gains on it, you can actually leave it here. And of course, the longer the trade matures, obviously you kind of come down. You're coming down all the way down to here, and by the time you've done that, your stop loss is probably over here or maybe here as well. It's kind of above these most recent highs, and eventually, obviously, it'll kind of come back up and it'll touch back out, and then you'll be, stopped out. And that's why we have stop losses, and you'll be making a very good kind of target profit there. I've spoken a lot about that. Let's move on to the next example. Next one here is basically an example of an inversion of what we've just been talking about. And of course, I'm going to go through this one fairly quickly. So I'm going to go ahead and draw a long position. And of course, we've come back down and retested, and we're going to enter here with the stop loss below the most recent lows, which is quite a few. So I quite like this setup. Then, of course, you want to kind of get into the trade here. Of course, it matures as it comes up, and we're aiming for the most recent high here. You can draw a Fibonacci if you like, as we did in the last example, and your 50% line will be up here. But what I will say is the market closes at this point, and obviously we don't like that. We don't want to hold our positions overnight. Again, as I mentioned before, if you're trading futures, that's a different example. But of course, we're here, we're trading SPY, and this can translate into Tesla, Amazon, AMD, any sort of stocks, because obviously they're open in the market hours. So you want to close your trade when basically the market closes, just before the market closes. And you would have had a really nice kind of trade there. What's that? 3.3 to 1 ratio, which is really nice. Especially when you're day trading. So these are day trading examples. We're going to move on to the swing trading examples now. I am aware of how long this video is going on for, but we're going to have a look at a couple of swing trading examples here. The first one is the bull flag. So we get a nice price action up, and it just kind of calms down a bit, but it comes down slightly. And this is called a bull flag setup. You've got your kind of pole, should we say, here, and we've got the flag kind of playing out here. What we want is a break out of the bull flag. As you can see, we do get it here, particularly for NEO. We come out, the entry would be basically the close of candle above it, if not the second one, depends what you're kind of comfortable with. I think for me, it's definitely wait for it to kind of close above it. Then the next candle is kind of when I enter, depending on when that candle kind of, in terms of market conditions, perhaps we have a news report that day, so just to be careful with the entries. But we'll get into the position here, and then the stop loss as where we are. I'll either keep it below the 20 moving average, as you can see on the screen here, we've got the yellow line, that's the 20 moving average, or I'll keep it below the actual lows of the bull flag. But you can see that's a very big stop loss. So again, it's down to your risk profile. And in terms of target profit lines, that's a different ball game as well. So you're probably going to go back on the chart if there's any most recent resistances. So you've got one here, as we can see, that's set back in November of last year, and we can kind of hit that fairly easily. So you can take the bulk of your position there, so 3/4, 2/3, whatever you like, and just let the rest run, of course, and it kind of performs itself into another bull flag. This one's a bit tricky though, because you don't really know where to enter. Yes, we had a nice break. It was a gap up overnight, as you can see on the screen there. We'll just zoom in a touch more. Yeah, nice break up, and obviously that confirms the break, so I wouldn't be entering this day, I'd be entering this day. And of course, subsequently, it went up really nicely. And of course, we would go back, we'd do a research, we'd see where the resistance lines are, and we'd draw them on the screen. That's what we'd be aiming for. All the time that we're doing this, we're bringing up the stop loss behind the 20-moving average. Stop loss is here. The trade plays out. You just bring it up behind the 20-moving average. Of course, when it stops out, you probably would have got stopped out here on this first one. But of course, we did actually break out for another bull flag trade. And of course, so that's your entry. We have it below the moving average, as we mentioned before, or all the way down here. But that's a massive stop loss. I wouldn't like that. Just for context, this is what we're talking about. That's the trade entry. And I'd have it below this candle or the 20-moving average, whatever you feel comfortable with. That's okay. Yeah, so that's another example. We'll move on to the next one. So this is the next example here. We've got core weave on the screen. This again is a swing trading example, and this is typically my setup. This is what I trade with more often than not, and this is just a simple trend line breakout trade. So we've got the trend line obviously starting from June here, and of course we've got a touch here, and we came back up. And we have a few touches around this sort of area as well in September. Subsequently, we broke with this candle and these two candles here. So on the smaller, kind of more volatile stocks, maybe not smaller, but more volatile stocks, definitely, you know, your Palantir, your Tesla, you know, these names here, CoreWeave, I would tend to probably enter on the second candle break. But with the bigger kind of stock names, I would probably wait for them to come back down and retest the trend line. As you can see, it didn't actually happen in this case because it didn't reach all the way back down to retest it, because this is a bit more of a volatile name. And we did get a bit of a news here, which kind of popped up the stock here as well. So on this particular trade, I am actually in this trade physically, which doesn't really matter. There's not really much context given there, but you can see I entered at this point here, which will draw the position. And obviously we're talking about stop losses in this video. So the stop loss would be below the most recent low, which you can see just here, or the 20-moving average, or both. And in this case, we've actually kind of got both. So you can see it came back down to touch the 20-moving average, but we probably wouldn't have got triggered out even if we did move up, because of course it's kind of bounced up after that. Currently, my stop loss is here, below the most recent lows, you can see, which will be set on the 7th of October. Let's drag that across, and it is also subsequently below the 20-moving average as well. So that's kind of nice and safe. It's a break-even trade. It will pay for all my fees as well, so which is pretty nice. And of course, the target price, which we're not kind of talking about in this video, but I've got it currently set at 165, and that's basically kind of where resistance is going back into the chart. So, and of course, if it does kind of mature upwards, let's draw a bit of a kind of mock price action. If it does kind of go up there, that'd be fantastic. And we'll draw kind of the moving average to coming up behind it. I'll color that yellow so you can kind of get to grips with it. I would just simply bring up the stop loss behind the 20-moving average or any other major drop downs. So yeah, that's kind of my strategy in a nutshell. We've talked about stop losses a lot in this video because that's what this video is about, and it's just a very, I would always set a stop loss regardless of the time frame, regardless of how big it would be or how small it would be. It's just always nice to have that kind of safeguarding. You do get traders out there just don't set stop losses, and that's up to them. But I personally feel a lot safer with stop losses. Let me know in the comments down below if you feel a lot safer with stop losses, because I know I certainly do. So that's it for this video. Make sure you click on the screen for the next video. It's going to pop up on the screen, which is all to do with trading as well. Trade safe, guys. Hope this helps you out. If you did, leave a comment down below. Really do appreciate it. And of course, subscribe to the channel. I'll see you in the next one.